Okay, time is up. Everybody, wars, high five, hello, Trader TV. Nice to meet you. Good morning, good evening, good afternoon, students and traders all around the world. This is Fxpassion broadcasting you live on TradingView. And this is Forex Trader Course 101. If this is your first time, everybody, please go back to the recordings and start to watch lesson number 1. Basic module, what is market structure? And what are we trying to do here, everybody? We are trying to build the 3 pillars of a beginner trader. Number 1 is the strategy and or a system. So we're trying to build a strategy and or a system that it's easy to understand and easy to obey. Number 2, we're trying to learn about risk management and how risk management affects our strategy. And the big one, we are trying to learn about psychology and how psychology affects our risk management decisions or strategy and system decisions. And remember, 90% of traders lose money in the Forex market worldwide. Okay? Doesn't matter Canada, Australia, USA, Europe, Russia, Brazil. 90% of traders still lose money in the Forex market worldwide. It's just a matter of time. Risk disclaimer, the webinars are not trading or investment advice. The webinars are for only. Either way, everybody, don't trade with money you cannot afford to lose. For questions or homeworks, TradingView house rules apply. You can contact me in private chat, or below the streaming you have the Gmail contact. Hello, Zuelius. Having 3 skills is better than 2. Especially in times of uncertainty. And yes, everybody, trading is a learnable skill. You can learn this. That being said, where are we here? Okay, so today's lesson 18. What are pivot points? Okay. Oh, we need to open a chart, something like this. Something like this. Okay, we need to find the space. Okay, so what is support, everybody? Is when the market is coming down, making lower lows, lower highs, lower lows, lower highs, and then it's going to hit a floor and it's going to react. Okay, so let's color code this in blue. Okay, explain everything, just give me a second. And like this and like this. Okay, so what is support? Support is when and where the market is moving, moving down, hits the floor and it reacts. Okay, plain simple is when and where the market's moving down, making lower lows, lower highs, lower lows, lower highs, is going to hit the floor and click here, is going to hit the floor and then it's going to react. Okay, how far is going to react, until where is going to react, this is another story. Okay, so let's go step by step. Now, what is resistance? Resistance is similar, it's almost the same story, just in reverse. Okay, so text, what is resistance? Resistance is where and when the market is moving up, it hits my English, everybody, can you correct my English? Ceiling, it's like this, ceiling is going to hit the ceiling, not sure about the word, is going to hit the ceiling and reacts. Everybody, if you are a native English speaker, can you check my spelling here? Resistance is when the market's moving up, hits the ceiling. I'm not sure about the ceiling word, if it's correct. If you're a native English speaker, please help here. And reacts, right? So the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's going to hit the ceiling, and then it's going to react. And what is a pivot point? Okay, now this is a little bit, so it's nothing special, right? Resistance is nothing special too. Now let me see if we can do something like this. Okay, now what is a pivot point, right? And we have two pivot points, everybody. First we have an, okay, up pivot point in here, and then we're going to have a down pivot point in here. Down pivot point in here. Okay, so what are pivot points? Pivot points are a combination, everybody. Okay, so a pivot point, the market is going to, hello Tiger, how are you? So pivot point is going to be something like this. The market is going to start making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It's going to hit the ceiling, everybody. Is going to react. Is going to move on. Is going to break through the pivot point. Then it's going to hit the floor and is going to continue its way up. Ceiling is correct. Thank you, Pickles. Thank you very much. So this is an up pivot point, everybody. Okay, so the market is going to, from downside up, is going to make higher highs, higher lows, higher highs, higher lows. It's going to hit the ceiling, you know, it's going to react, but then it's going to break through in here, break through the ceiling, and then it's going to reverse and it's going to come down, hit the floor in here, and then it's going to move up. So this is the difference, everybody, between a pivot point. We're going to talk about a down pivot point too, but this is the difference between beginner traders. This is the difference and pivot points. Hello Israel, how are you? Good morning. Good morning to you, my friend. So this is an up pivot point. And text, right? Text. One more time. Up pivot point is where and when the market is going to, oh, let's move it here. Up pivot point. The market is going to, Sam says, it's that similar to breakthrough. Good day, by the way. Good day to you. Well, it needs to break through the pivot point. I don't know what you mean. Okay, not sure about your question, Sam. Hello, DMW, how are you? So a pivot point is where and where the market is going to. Okay, number one, hit the ceiling and react. Number two, break through up, and number three, after the break, it will reverse and hit the floor one more time before number four, it continues its way up. Okay, everybody? Up pivot point is where and when the market is going to, right? It's going to make higher highs, higher lows, higher highs, higher. So what's the difference, right? What's the difference in here is that if we look at resistance, everybody, the market's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So until in here, you know, it's going to hit the ceiling and react. So this is the same, right? This part is the same. But then pivot point, you know, is going to, so it's going to react. This is the reaction. Number two is going to break through. Okay, this is the difference between resistance and an up pivot point. And then once it's on the other side of the line, everybody, once it's on the other side of the line, is going to, after the break, is going to, it will reverse and hit the floor. So this part, it's kind of similar, right? It's going to hit the floor and it will reverse and hit the floor one more time before it continues its way up. Okay, right. So do you have any questions in here, everybody? So support, it's quite easy to understand, right? Resistance, easy to, nothing special. What about the pivot point? Do you understand, everybody, how this works? And then we're going to check the live market, of course. Up pivot point, the market is going to go up, up, up. It's going to hit the ceiling. It's going to react. It's going to break through. It's going to reverse, you know. So talking about the pivot point, this is the rule, everybody. So in order to draw a pivot point on the chart, the market must hit the level, okay? It must hit the level from the downside up and from the upside down. Okay, everybody, this is the rule of the pivot point. It must hit the same price level from the upside, from the downside up and from the upside down. Okay, otherwise, I don't care who is teaching you, what is teaching you, otherwise, it's not a pivot point. Are we clear, everybody? Trader TV says yes. Okay. Highs and lows, just the high or just the low are not pivot points. Yes, sir. Yes. Okay, cool. Okay, you can tell the other guys that the high or just the low, it's not a pivot point. Okay. And what is interesting with the market, everybody, is that the pivot point is a combination. You know, if you take this quadrant in here, if you take this quadrant in here, you know, this is it, right? We are looking at the same, come on, trading view. We are looking at the same price movement, right? And this circle, you know, is this circle. Well, one more time. This circle is here, is this circle in here. So really a pivot point, it's a combination, you know, between those two. Okay, so before addressing, right, the down pivot point, which is going to be the same, just in the opposite direction. Okay, so left here, it's a rule, you know, rule, pivot point rule. In order to be considered a pivot point, in order to be considered a pivot point, the market must hit the same price level or area, okay? It's not to the pip sometimes, price level area from downside up and also from upside down. Okay, pivot point rule, everybody. in order to be considered a pivot point, PP, the market must hit, oh, grammar mistake, the market must hit the same price level or the price area from downside up, like in here, and also from upside down. Okay, now what is a down pivot point? Well, it's the same, just in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Is going to hit what? If before it was a ceiling, now it's going to be the floor. Yes, sir. So it's going to hit the floor first. It's going to react. It's going to break through in some point in time. Then it's going to reverse. It's going to retest. It's going to hit the ceiling before it's going to make its way further down. Okay, everybody? It's the same, just in the opposite direction. So hit the floor, reacted, broke, broke through, reacted again, reversed, hit the ceiling, and continue its way down. Okay, so let's clone this. Let's clone this, and where should we put the text? Somewhere in here. And let's correct the text, everybody. Down pivot point is where and when the market is going to hit the floor first and react, breaking through. It's going to break through down, this time down. After the break, it will reverse and hit the ceiling. Ceiling one more time before it is going to continue its way, not up, but down. Okay, everybody, take a screenshot of this, make a photo, picture, whatever, type in the chat done so we can move forward, everybody. Take a screenshot, a photo, whatever, and type in the chat done so we can move forward. Now it's going to break through. Sam says done. Type in the chat done, everybody, so we can move forward. On the other side, everybody, any questions so far? Any questions about what is support? Thank you, Israel. Done. How long time frame do I have to consider the call it as a pivot point? Great question. We're going to talk about this right now. Done, done, done. Thank you very much. Everybody, are we clear on what is support, what is resistance, what are pivot points? Okay. Now, Trader TV is asking how long, talking about the time frame, do I to consider to call it a pivot point? So here is the answer, everybody, and it's a trading concept, okay? Trading concept. The higher the time frame, the more relevant are the support slash resistance slash pivot points. The higher the time frame, the more relevant. You can use also the word stronger are the support, resistance, and pivot points. Everybody, quadrant in here, trading concept. The higher the time frame, the more relevant, the stronger are the support, resistance, pivot points. Okay. So in this aspect, we learned in the previous lessons, everybody, and one more time, if this is your first time with us, please go back to the recorded streams and to watch the webinar lesson number one. Lesson number one, what is market structure? Okay, so, and we multiple time trading, just a little bit. It was a concept. So between the charts, between the different time frames, everybody, what pivot point or what support or resistance level is stronger or more relevant? Everybody, which one is more relevant? Is the daily, the monthly, the weekly, the 15-minute chart, the 1 hour, 2 hour? We are going to find support, resistance, and pivot points on all time frames. But talking about stronger, which one is stronger? The higher, the monthly. Yes, Duke, you're correct. The monthly is the strongest. Israel higher, yes, sir. All of them know the higher, the strong resistance or pivot point or support. Monthly, yes, correct. Okay, now why are we learning this on lesson 18, everybody? Because now, remember, we learned in the previous lessons about the market wave, extension, retracement, the short-term trends in an up wave, right? The market is going to make higher highs, higher lows, higher highs, higher lows in an up wave. Then it's going to reverse, start making lower lows, lower highs, lower lows, lower highs. It's going to retrace, and then it's going to reverse one more time. So with pivot points and support and resistance, you know, we are going to try to find where those reversals happen. Make sense, everybody? So this lesson today, it's really an upgrade from the previous lessons. Trader TV higher, Sam, why monthly all time frames are consistent on its own? Just curious. Sam, there is a concept and it says the higher time frame controls market direction of the smaller time frames. Okay, great comment. Everybody, beginner traders, you need to learn that the higher time frame controls price movement and market direction of the smaller time frames. Okay, Sam, if you have time and if you will, go back on the recorded webinars and we have sessions on frame trading. No need to apologize, everybody, no? We are telling you, don't be shy, don't be scared, you know, we are here to, there is no right or wrong, we are here to learn. Okay? So the higher the time frame, the more relevant, stronger are the support, resistance, and pivot points. Okay? Now, let's, everybody, tell me a currency pair that you like, whatever, you know. And then we're going to try to identify support, resistance, and pivot points. And we're going to start with the monthly. GBP, JPY, great. So GBP, JPY. Everybody, so I'm going to, so this page is going to disappear. Did you take a screenshot of the currency pair? Or maybe I don't need to, right? I need to be smarter, you know, giving classes. So I'm going to GBP, JPY. Monthly chart, GBP, JPY monthly chart. Okay. GBP, JPY monthly chart, right? Okay, everybody, GBP, JPY monthly chart. And remove the drawings. Okay, done. Thank you very much. Okay, everybody, so I'm going to draw a line and I want you to tell me what is the line. Is it support, resistance, or pivot point? Okay, and make it bolder. Okay, what is this line? Is this a support, resistance, or a pivot point? What is this line? Everybody? Is this support, resistance? Duke says resistance. Yes, sir. Okay. Now I'm going to everybody. What is this high in here? Resistance, ceiling. Yes, resistance, resistance. Great. Okay, this was the blue. What is the red? What is the red line? Everybody. What is the red line? What would you say? Don't be shy, don't be scared. There is no right or wrong. Sam says support. Pivot point is red. Anybody else? What is the red line? It's a pivot point or it's support? And support. Okay, so just give me a second, everybody. Okay, no way. We are going to do it like this, no problem. Jack says resistance, pivot point. Okay, so right, step by step. Do we agree, everybody, that this market, GBP, JPY, monthly chart, do we agree that the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and it hit a ceiling in here? 1, 2. Do we agree on this, everybody? The market is making higher highs, higher lows, hit us. Remember, beginner traders, pivot point, support, resistance are not lines. Those are areas. Okay? It's not to the pip. Be very careful. Oh, this pivot point is at 195.000. This would be wrong. Those are areas. Okay? So do we agree that the market went up, hit the ceiling, and reacted? We have a reaction, right? So I'm going to delete this one, delete this one. Okay, I'm going to go with the highs and the lows, everybody. Now low to high, to low to high, to low to high, to low to high, to low. Did this market react, or it was just pushing up like business? What kind of reaction we can have? Well, we can have a short-term downtrend. We can have what kind? Once the market hits the pivot point or the ceiling or the floor, we can have a change in the short-term trend. Just an example, you know, this could be the change, or sometimes, you know, the market would pause and consolidate. Make sense? Okay, so we have right. Then what happened next? Talking about this area, you know, it's an area, it's not a line. What happened next on this area? Lower low, yes, sir. What happened next? It broke through. So for the traders and the students that were saying, oh, this is resistance and or support, Yafo says divergence, rejection, break. It broke through, right? So talking about the rules, everybody, that we have, or it's resistance or it's a pivot point. Yeah, it broke through resistance. So then consolidate, yes. So what is this level, everybody? Is this a pivot point or is this resistance? Beginner traders, what is this? Resistance or pivot point? Or support, whatever, you know? Duke resistance, resistance. Everybody, okay. So let's see what happened next, right? The market went up and up and up, right? And up in here, right? And what happened in here? Whoops. What happened in here, everybody? Circle. Emir says pivot. Pickle says pivot. DMW to resistance. Israel pivot point. Lars says support. Trader TV pivot point. Pivot. We are getting there, everybody. It's a pivot point. Okay. Pivot points are made from past support and past resistance, everybody. See, so when we draw pivot points, we are going to see what? We are going to see the market moving from downside up. Is going to hit the ceiling, is going to react, and is going to break through. And then we are going to see from upside down, is going to hit the floor, react, and break through. Okay, so reaction here from downside up, reaction here from upside down, reaction here from downside up, reaction here from upside down, everybody. This is a pivot point. Okay, it's a pivot point, everybody. So identifying resistance, it's easy, right? Now, what is this line? Down in here. What is the green line? What is the green line, everybody? Duke says support. See, everybody, this is the live market. We're going to check theory in a second, you know? We're going to check theory in a second. So, one more time, talking about the rules. What is resistance? Resistance is when the market is, when and where the market is going to go up, making hard highs, hard lows, hard highs, hard lows. Is going to hit the ceiling, going to resistance. What is support? Support is when and where the market is going to make lower lows, lower highs, is going to push down, is going to hit the floor, and then is going to react. This is support, okay? And pivot points are levels when the market is going to be a combination of those two. Make sense? So pivot points one more time for the beginner trader. Pivot points one more time. The market is going to go up and up and up. It's going to hit the ceiling, react. It's going to break through. Then on the smaller time frames, you're going to, is going to push back down. It's going to hit the floor and continue its way up in an up pivot point. And maybe not the best one to see, especially this, but in a down pivot point, you know, it's going to be the same. It's going to make lower lows, lower highs. It's going to hit the area. It's going to react. It's going to break through. It's going to come back to the ceiling. Yes, beginner here. Welcome, beginners. You know, this is a beginner's course, everybody. And if this is your first time, please go back to the recordings and start to watch and learn from the lesson number 1. Okay? So, in order to draw, how we are going to draw pivot points and support and resistance levels, everybody, we are going to connect the highs and the lows. Okay? So, rule, when drawing support / resistance / pivot points, we need to connect